Hello, everybody. Welcome to Wiley Solution Walkthrough. This is Accounting Tools for Business Decision Making, 8th edition. This is problem 20-3. The question used in the presentation is copyright 2022 by John Wiley & Sons. The textbook authors are Paul Kimmel, Jerry Weingant, and Jill Mitchell. All rights are reserved. This is for educational purposes only. The video may not be distributed or be distributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. So let's kind of go ahead, and before we thank the bus driver, let's go right over here. And so as we're looking at this one for problem 20-3, this took me a little while to kind of go through and figure out, but once I kind of figured it out, it made a little bit more sense. But right over here, you've got Thompson Industrial Products as a diversified industrial cleaner processing company. The company's Dargan plant produces two products, a table cleaner and a floor cleaner, from a common set of chemical inputs. Each week, 900,000 ounces of the chemical input are processed at a cost of $210,000 into 600,000 ounces of the floor cleaner and 300,000 ounces of the table cleaner. Floor cleaner has no market value until it's converted into a polish, which with the trade name Floor Shine. Additional processing costs for this conversion amount to $240,000. Floor Shine sells at $20 per 30-ounce bottle. The table cleaner can be sold for $17 for a 25-ounce bottle. However, the table cleaner can be converted into two other products by adding 300,000 of another compound, and this will lead, joint process will yield 300,000 ounces of these two different ones. Okay, so the additional processing cost of this amount for $100,000. Both products can be sold for $14 for a 25-ounce bottle. Okay, so here's the big thing. What they failed to do in their analysis, and this is when you're looking at what, did they make a correct decision or what they failed to do, is you have to show the whole picture. You can't just show, because if you're taking this, and so let's take a step back. So let's look at their existing business, right? So in their current business right now, they have a floor cleaner and they have a table cleaner. The ounces for the table cleaner are 300,000. The number of ounces for the floor cleaner are 600,000. Okay, so the units being sold for the table, so the Floor Shine sells at $20 per 30-ounce bottle. So if I take 600,000 divided by 30, right? So that's where this number is coming from, right? Now the price per unit for the Floor Shine is basically, it's $20. So my total revenues for the floor cleaner are going to be 20,000 times 20 or 400,000. Okay. So once I have this, then what I also need to understand too are what are the costs for the floor cleaner. Okay, so for the floor cleaner, we basically have over here, basically Floor Shine. So again, reading through this stuff really carefully, two products, a table cleaner and a floor cleaner from a common set of chemicals. Each week, 900,000 ounces of chemical input are produced at a cost of $210,000. Okay, so the $210,000, and we can call this over here CDG costs. The $210,000, as you can kind of see over here, it was allocated, a third. So this is 600, this is 900,000. So a third of 210,000, which is the cost right up here. So basically this cost is 210,000. So this is going to get allocated 140,000 to the floor cleaner. And it's going to be allocated over here of 70,000 to the table cleaner. Okay, so right over here, that's the CDG cost. Additionally, if I'm producing the floor shine, as I'm going through over here and looking at the cost of the floor shine, the additional processing cost of the conversion. So the floor cleaner has no market value until it is converted into a polish with the trade name floor shine. So the additional processing costs amount to $240,000. So my total costs over here are going to be 140 plus 240. Over here, I've got 70,000. Now at the same time over here too, for the table cleaner can be sold for $17 for a 25-ounce bottle. Okay, so this means in terms of units. Okay, right, so right over here, if I take 300,000 ounces divided by 25 ounces per bottle, is going to give me table cleaner of 12,000 units. Okay. This over here sells for a price per unit of 17. So right over here, I've got 12,000 times 17 is 204. So when I look at this in terms of my total profit or my net income, and we'll call this do not process further. So I'm making a total of 900,000 ounces in terms of my units. So I don't have to worry about that. My total revenue, my CDG costs, my additional processing costs, total costs are at 450. So my net income right over here in terms of keeping this the same is going to be 154,000. Okay, so this is 204 minus 70. This is going to be 400 minus 380. So this is the baseline scenario if we just decided to say, hey, we're not going to process further into the different chemicals, but this is what this is going to go through. This is what it will look like for us if this is what we decide to do, right? We're not processing further. We are literally just going to go through, and we're going to go through it right over here and just keep things as normal. Okay, this is extremely important when you're looking at these numbers. You have to have a grip on what you're doing right now. If we take the table cleaner and we then convert that into table stain remover and table polish, then what does it look like? Well, if we're going to process further, okay, the floor cleaner is not going to change, right? So over here, we're still going to have 600 ounces of floor cleaner. There's still going to be 20,000 units being produced at a price per unit of 20. So the revenue from the floor cleaner is going to be 400,000. Also over here in terms of the costs, and this is where we'll get into a little bit of a different types of things. We know that we're going to have additional processing costs for this, but this is, this is basically, so this is going to be the same as what we had before, with the exception of the allocation over here. So what you're seeing here is they're not really comparing apples to apples, right? So they're basically putting these here. They're basically reallocating the cost, which is going to change the amount that's going to be allocated over here to the floor cleaner. So as we look at this, our problem right over here, so this is basically, we've got the floor cleaner, which is not going to change. So our next part over here is we have a table stain remover and we have a table polish. So over here, these are ounces of 300,000 each. Okay, right, because this is how many more, it's essentially I have to add another 300,000 solutions. The joint process, I have to add another compound of something called TCP. And if I add this TCP, which we're allocating by 50,000 each, I'm able to basically take this and convert it into this. So this over here, in terms of the number of units, 300,000, the additional processing costs both could be sold for $14 per 25-ounce bottle. So again, I'm going to take 300,000 ounces and divide it by 25 ounces. This is how I'm going through and getting my units. And this is also going to be able to be sold for 14. Okay, both table products can be sold for 14 per bottle. So now when I come over here, so okay, I've got 12,000 units at 14. This is giving me 168,000. So this is where this number is coming from right over here in terms of the revenues. So now when we get into costs, this is the big deal. So before, when we were looking, this is being allocated based on ounces. So my total number of ounces that we have is, right over here, this is at 900,000. When I was going through and allocating this previously, the 70,000, why is it come? Where did that number come from? Well, if I took 210 times 300 divided by 900, that's where I'm going to be getting the 70 from. What happens over here now is I'm going to take, I've got TSR, TP, and I have floor cleaner. My ounces, this is going to be 300. This is going to be 300. And my floor cleaner over here. So now I've got a total of 1.2 million ounces. My percentage of the total, this is going to be 25%. This is going to be 25%. And this is going to be 50%. So over here, my CDG costs of 210,000. This is now going to be allocated as 52.5, 52.5, and then 105,000. So this is where this analysis really kind of made the mistake, because the allocation's changing, right? They got this allocation correct, but this allocation is correct. It's 52.5, but you're not comparing apples to apples, right? Because that's going to impact, because my total CDG costs are 210,000, right? It's not comparing apples to apples. So right over here, this is going to be 52.5. This is going to be 52.5. And now the floor cleaner, instead of having 140,000 allocated to it, it's now going to have 105,000 allocated to it. Okay. So again, the thing that I want you to learn from this is you always have to go through and write it out. You don't want to be saying, oh, well, no, you write it out, make sure you fully understand it. So my total revenue is at 736,000. My CDG costs are at 210,000. My TCP, right? Where does that thing come from? Well, the TCP costs are basically these costs that are right over here, that if I turn table cleaner into these parts, I'm going to have like this extra $100,000 of cost. That's where that came from. This additional processing for the floor cleaner has not changed. So my total costs over here are 345, 1025, and 102,500. So for my total costs right over here are 345. So my net income is going to be 400 minus 345, 168 minus 102,500, 168 minus 102,500, 736 minus 550. So again, right over here, when you look at the 65.5, this is correct. It's just the thing they didn't do is that what management failed to do is that's not the correct number. You cannot use this to compare because it's impacting the profitability of the floor cleaner. Okay. So now what we're going to go through and do is that we're basically over here, we've got processing further. So where does that leave us? Well, without processing further, I'm at 154. If we process further, I'm going to be at 186. So my improvement is going to be 32,000. Okay, so when you get this type of problem again, and you'll see me do this throughout this chapter, and this is when I remember going through and teaching. When I first started teaching, I saw this crap with opportunity cost, and I really just don't like it, because to me, it's like, well, like, let's lay it out. So remember, when we're producing numbers, we want everybody to understand and to see it. And instead of using like these esoteric things like opportunity cost, why don't we just spell it out? Why don't we just tell you this is what it looks like right now, and this is what it's going to look like if we process it further? So that's my thought to you. And I'll show you. Let's just take a look at what Wiley does right over here. And again, I'm not, this is not being critical of them. I just know that as a student, what can be really difficult is to try to go through and to understand, when they say this, when they show these things, like, does it make sense? So here, the analysis that we just did, we're getting to 154. We obviously did it a little bit differently. I broke it out by different products. Again, that makes it easier for me to understand. Over here, getting to the same number, getting the 186, right? That's the same thing. And so when you look at this, again, I like to say, oh, 186 versus 154, that's a $32,000 difference. So that seems like the right answer. But yet they're going through, oh, incremental, like, this is, to me, a user, this is too hard to understand. And I would really encourage you, because remember, you're going to have non-accountants like looking at this information. And if you have to show the numbers, why not just stick to this? This looks great, right? This is, you're showing, oh, this is 32,000 higher. Therefore, management should have processed it further, right? And then this part over here, in terms of like looking at the incremental revenue and that sort of thing, I just don't, again, to me, it's just on another planet. I've been teaching the subject for the last 8 years. And honestly, like, when I see this kind of stuff, I just don't like to look at it that way, because it's going to confuse me. I get up in front of my class and I don't know how to explain it. And that's like my greatest fear as a teacher, is getting up there and, I make mistakes. I can sound like an absolute idiot sometimes, but if I'm trying to explain something, that's why it's so critical for you to, if you show it, you say, here's what it is, the numbers are what they are, it's going to be very, very hard to go through and argue about it. So that takes us to the end of going through and looking at this question. Again, I really want to thank Wiley for allowing me to continue to use their questions that I put into these packets. And please feel free, if you'd like to see other questions or other solutions, please feel free to ask for them in the comments below. Have a great rest of your day, and I look forward to seeing you on the next video. Have a great day.